best trade setup, and in this video, I will take you through the trade that I took on the 9th of September 2025. I only trade because I prefer to take one pair as the one that I trade, and I trade it at a specific time of day, preferably in the New York session. In fact, I only take it in the New York session. That's when I've seen that my trades are most likely to work out in my favor. So before I go dissecting the charts, I look at Forex Factory just to see if there's any high impact news taking place. And I don't take any trades leading up to the high impact news. I wait for price to kind of settle down, the volatility to settle down, and then look to enter trades. Right here, I am using the time. This time right here is GMT plus 2. That is the time zone that I'm in. And usually I take my trades around 3 p.m. up to 6 p.m. or even 6:30 if I see price lining up in a way that presents a trade opportunity. So the 2:30 p.m. is when we have the US having its high impact news for the most part. Sometimes it could be 4 p.m. or whatnot, but I do stay away from taking trades leading up to that because price has a tendency to just act in an erratic way. So first off, I look at the 50-minute time frame. I do look at the 1 hour and the daily just to mark out the resistance and support levels. But for the most part, I start off with the 50-minute time frame. My charts usually have a lot of lines because that's how I trade. My charts usually have a lot of lines. You must understand that everyone has a way that they analyze their charts, and to each their own. You just need to find what works for you. And I would advise that when you come across a trader who trades differently from you, don't be so quick to disregard what that trader says because it's not familiar to you. Because we could have similar strategies and be profitable. We can have strategies that have nothing in common and still be profitable. You never really know what you're going to learn from another trader. You just need to keep an open mind. And just because you're listening to them and what they have to say doesn't mean you are going to implement it the next time around when you go look at your charts. Nor should you. You need to backtest it. You need to see if you adding whatever you learned from someone else increases your profitability in any shape or form. So obviously, if what I'm saying right here is not familiar to you, it's okay. Give yourself the chance to hear me out. If not, then that's still fine. Thank you for passing on by. I wish you the best with your trading. And we're going to move on to looking at the 50-minute time frame. What we have here is a reset. That means whatever buys were confirmed here, for me to enter buys again, I need to look for another 5 or 6 confirmations. And I will explain to you why I say 5 or 6. 5 depends on where price is at in that moment, and 6 still the same thing at where we when we look at price. So I'm going to explain it to you when we drop down to the 5 minute time frame. So we have price crossing down to the downside. So that means if we're going to look for buys, we need 5 or 6 confirmations. And then we have price crossing back down here again. But first, this is a reset, meaning whatever buys that we had leading from here to here, right? Once price crosses down here again, we need a fresh set of buys, a fresh set of confirmations to confirm buys. So price continues to go down, 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 and then we cross up to the upside, meaning whatever cells were confirmed from here to here, we now need to restart the count, looking for 5 or 6 confirmations to enter cells. This vertical red line here shows that there were sell opportunities in this area, sell entries in this area. So when you see vertical red lines, that shows sells. When you see vertical blue lines, that shows buys. And the reason why I mark out the sells or the buys is that when we're moving forward from the first confirmed sell, next time that we're entering cells, we're not going to look for 5 or 6 confirmations. We're just going to look for a break and retest in the form of a 3 candle pattern. Some of you may know that as a morning star or an evening star pattern, or we're going to look for an M pattern or W pattern. An M pattern is a double top, a W pattern is a double bottom. So moving forward, when I say M pattern, just know that I mean a double top. When I say W pattern, know that I mean a double bottom. And when I say three candle pattern, just know that those candles form a morning or evening star pattern. And if you look closely at the three candle pattern, when you add those candles together, they always form a pin hammer. A pin hammer is a rejection candle. So I'm gonna drop down to the 5 minute time frame so that I can tell you what exactly was happening here for us to have confirmed ourselves. Now, this is a closer look of the 15-minute time frame. I want you to pay attention to these notes right here. All the time when I say something, there are going to be notes on the chart so that you can take some time, just pause the video and read through the notes. This is also how I maintain my own personal journal to see later down the line what exactly was I looking at? Why was I doing things this way? This has allowed me to improve throughout the years because when I look back at my journal from when I started till now, I can see the progression. I can look back and say, okay, I understand why that one didn't work out. I understand why this worked out. And that's how you form your winning strategy. You go back in time and see, okay, from the winning trades, what do I keep seeing? What always shows up? That's how I came about with my strategy. That's why I'm saying I need five or six confirmations because when I looked at all my winning trades, I saw that they had at least five or six confirmations. When they had three, they didn't work out. When they had four, they didn't work out. When they had five, depending on where price is at that time, they would work out. Depending on where price was at another time, they didn't work out because they have five confirmations. So that means I need six. So that has allowed me to form my winning strategy. So now we have this green line right here and this red line right here. This marks the high and the low on my 15-minute time frame. So it's very important because when we're looking at our highs and our lows, this previous low still has significance on the 5 minute time frame and the 1 minute time frame. If at all there were pullbacks between this area right here, this point right here, and the support right here, this level would not be of significance. I would use the most recent lows because of the pullbacks that would have happened right here. I use recent levels when I'm analyzing my charts or when I'm looking for entries. So then this is what this note is all about. Now we're looking at the 5 minute time frame and like I said, we're going down, 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 down. So whatever cells were confirmed from this point to this point, I now need to restart the count once price crosses above this level right here. So whenever price crosses a significant level, it forms an order block. And the way I define my order blocks is that I need price to break structure. I need price to break structure. Excuse me. I need price to break structure, and it should be a strong impulsive move or like a uniform move leading up. So when this happens, I look at the last bearish candle coming off of a pullback. It could be the last bearish candle before the break of structure, but if it's not forming a pullback, that will not be a place where I would mark out my 5 minute order block. So the yellow line symbolizes a 5 minute order block. The yellow line with the OB on it symbolizes or shows us that this is a 15-minute order block. So right here, we see ourselves. And I'm going to show you a closer look at this price action right here. So right here, we do have the price action that I spoke about earlier. And what we see is a fake out, price closing up, closing down, fake out. And with every fake out, there will always be an M pattern. The reason is this forms the second leg of an M pattern, right? So for every fake out, for every sweep, It's going to be accompanied by an M pattern or a W pattern. So now we have two confirmations, and we have a 3CP, three candle pattern, like I said earlier on, morning star, evening star pattern. And then we have this price action happening in an order block area marked by this line right here. So we have four confirmations so far. We need six confirmations. Whenever we have a pullback like this right here, below an order block, below an order block level, we need five confirmations. If there isn't a pullback forming a resistance level, we just look for six confirmations. So even though we have a pullback here, right, and I'm looking for six confirmations, it's because this candlestick right here, this candle wick rather, of the pullback taps into the 5 minute order block. So I'm not going to look for five confirmations. You can still, with a lot of experience, still look for five confirmations because this wick hasn't tapped into the 15-minute order block. So for me, in this case, I had a total of one, two, three, four, five, six, seven, eight confirmation, more than enough, more than five, more than six. So I just needed a close below the 20 EMA for me to enter my cells. So what we have here is, you might call this a pullback because there are two bullish candles going up, but it's not a pullback for me because the wick of the second green candle is below this one. It's just showing me that price is going down. I need to see a pullback for me to now start considering this and this as a fake out. So once we have confirmed this three candle pattern, I am going to look for other confirmations, and we see that we have two bullish candles right here. And even though there is a bearish candle between these two, this bearish candle did not go below the wick, the lower wick of the first bullish candle. So this is a valid pullback. It's another variation rather of a pullback. So it still counts. So depending on, like I said, more experience, once we have confirmed this three candle pattern, it's locked in. We cannot use this moving forward as a first leg, second leg situation of an M pattern in this area. It's its own pattern. Now, we have to look for another candle pattern moving forward. So I'm going to start with this candle right here after the pullback. And then we have a fake out here. Fake out M pattern, bearish engulfing candle. All of this happening in the order block area. Four confirmations thus far. And then we have a close below the 20 EMA. The 20 EMA is this red line right here. Yes, I do have price action having enough confirmations, but for me to enter a trade, I need a close below the 20 EMA. If it's for buys, I need a close above the 20 EMA. So this is all happening in a time frame, well, rather in a trading session that I don't trade, which is the London session. I just do this so that I know what's been going on leading up to the time that I come to the charts. So knowing that sales have been confirmed, when I go onto the charts at the time that I trade, I'm not going to look for five confirmations. I'm not going to look for six confirmations. I'm just going to look for a break and retest in the form of a three candle pattern or an M pattern or multiple top. Could be triple top, could be five tops. So that shows me that right there we're going to enter sales, and it doesn't have to have another close below a 20 EMA. No, we've already done that in this area right here. And the reason why I look at things in this way is because when I looked at other traders and their videos, they would apply a lot of discretion in their analysis. And that's not wrong. That's how they do it. But I just didn't understand why they did this in a certain way or why they did that in a certain way. They never really made sense to me. So I needed a system where it was strictly rule based. This adds up to this, then I do this. If this doesn't add up to this, I don't do anything at all. So I decided to kind of share with you folks how I do things. Take from that what you will. If there's something that you find valuable, good for you. If not, That's still fine. Like I said, to each their own. So you need to find what works for you. So right here, we do have a break and retest. Are we going to enter sales here? No, because these four candles are not adding up to a pin hammer. Three candle patterns or evening star patterns and morning star patterns, when you add those candles together, they form a pin hammer. A pin hammer is a rejection candle. So my three CPs can be three candles, maximum four candles. Four candles if all of them add up to a pin hammer. Now, when you add these candles together, they don't form a pin hammer. Another point I want to show you is this cross right here that's in this yellow dot. This shows inside candles. Whenever I see inside candles, I don't pay them no mind. I don't pay attention to them. I just ignore them because it's price ranging. I need price to break out the range of this candle for me to pay attention to it, for me to see if it's doing something of significance that I need to pay attention to. So in this case, when you see a yellow one, it means that there's more than one inside candle. And then when you see a white one, it just shows one inside candle. I don't want a situation where I'd have these white dots, a lot of them in an area. I'm doing my best to minimize what I put on the charts, even though you see like there's a lot of lines and arrows here. The arrows are because I want to explain what's going on to me and to you for my trading journal. So now what we have, we ignore these two candles. So we have this and this, which is a simple break and retest. So I'm not going to enter sales here. Price goes down and then comes back up. And then we have inside candle, but we do have price closing above this area with this bullish candle and then here right here and this bearish candle right here. So it's a break and retest. But now it's not in the form of an M pattern or a three candle pattern. We now look at the fact that this is the second break and retest. When you look here, price goes down, comes back up, goes down, comes back up, closes right here with this bearish candle. This break and retest is in the form of an M pattern, a double top. So this is an entry for me. And the first take profit would be the order block. Now we see that price spiked up here. That means that had we taken sells here, our stop loss would have been taken out. Now we do see a vertical red line, meaning that they are buys. So these buys are on the 1 minute time frame because if you look at the 5 minute time frame, there is no reason for us to enter sells. On the 1 minute time frame, there is a three candle pattern in the form of four candles, which is a pin hammer when you add those four candles together. Now, this is our second sell entry above the order block. Whenever we have two trade entries, verified valid trade entries above the order block, that means our first take profit is not going to be the order block. It's going to be the lower boundary of the order block. That means price has a high probability of reaching the lower levels of the order block. And as you can see, price exactly did that. So now we are going right here and we see that price goes up, forms an M pattern on the line chart because we have a bullish candle, bearish candles, bullish candle, and then a bearish candle. This on the 5 minute time frame is an entry for sells. We can even take these right here if we want to, but our take profit would be this here because it's still in line with our first initial sells. Now, this vertical line also shows us the us sells, but also the sells on the 1 minute time frame. This is where I took my trade. I took it on the 1 minute time frame. So what you see here, right here, is just a sell, but I'm gonna tell you it's on the 1 minute time frame. So sells on the 1 minute time frame, and those usually give a 1 to 2 risk to reward. That's why I took the trade, even though the bottom of the order block isn't a 2 RR distance away. Now, if this was happening on the 50-minute time frame, I wouldn't have taken these sells because look where the candle closed, right near our take profit area. I took this because the 1 minute time frame, for the most part, gives a 1 to 2 risk to reward. So I usually aim for that on the 1 minute time frame. On the 5 minute time frame, I aim for a 1-to-1 risk to reward. So that's why I wouldn't even take this trade right here because one, 1-to-1 risk to reward, and with the 5 minute time frame, when you trade into a level like this, even though it's valid, even though for the most part we aim for a 1-to-1, price can just bounce off of this level and then continue going up. I've seen this happen many times. So that's why I didn't bother with the 5 minute time frame to go into it. The 1 minute time frame, on the other hand, for the most part, will give you a 1-to-2 risk to reward. Worst case scenario would be 1-to-1, 1 to 1.5. But for the most part, 1-to-2 risk to reward. That's why I took this trade. And I took it based on the experience that I have with my trading strategy. So we're gonna move on, and I'm gonna show you this on the 1 minute time frame. Also, I want you to notice this level right here, very significant level on the 15-minute time frame. Remember, I said this is the high and this is the low on the 15-minute time frame. So that means this level, even on the 1 minute time frame, is valid enough for us to take a trade off of it. Now, this is a bigger picture. I want to show you this 5 minute time frame. I mean, the 5 minute order block from way back when on the 8th, right there, the previous day, the Monday, right here. You see that right there? And this is the order block that I was talking about from these two entries, and the lower boundary being this. As you can see, it's right here. Just want to show you why that was the lower boundary and where it comes from. Now, right here, we have no buys confirmed on the 5 minute time frame, so we maintain the bearish move. If we ever have confirmed buys, in this sense, we have sells. When we have confirmed buys, that means for us to re-enter sells, we need 5 or 6 confirmations because now we have something that shows us that prices have potential of going up. So for us to continue with the down movement, we need another 5 to 6 confirmations to the downside. But since we don't have this right here, we're just going to continue with our bearish bias. So right here, like I said, I took the trade in this area on the 1 minute time frame. I'm just going to show you that there is another opportunity for sells in the form of a 3 candle pattern on the 5 minute time frame based off of the 15-minute support level right here. Because there aren't any pullbacks on the 50-minute time frame, this is our most recent low that was formed. So we still use it on the 5 and the 15-minute time frame. Now we're gonna drop down to the 1 minute time frame. What we have here, what we have here, we have price going off of that same level that I was telling you about from the 50-minute time frame. It still is significant for us when we look at it on the 1 minute time frame and the 5 minute time frame. So we do see price going up here and then closing down here. These are several tops. So on the 1 minute time frame, I'm looking for break and retest in the form of a 3 candle pattern or an M pattern, triple top, or multiple tops in this case. So once price closes below here, I know that for the most part, price is going to give us a 1-to-2 risk to reward. When you calculate the distance from here to here, and you're going to multiply it twice, you can see that it's probably around here and then around this area right here. You see price did reach the 1-to-2 risk to reward. So then we have that right there. I entered my sells in this area. The optimal trade entry was this candle right here. I entered here because, like I said, it's a 1-to-2 risk to reward trade. When I take it from here with my stop loss here, the risk to reward is still positive. It might not be 2, but it's 1 point something. So I keep my stop loss here and then I take my take profit right there. Even on the 1 minute time frame, we do see a break and retest, and then we see an M pattern formed because this is like up and down again. But like I said, this by this time right here, I had already set my trades, and I left it. I was just waiting for price to reach my take profit. And eventually it did reach my take profit. Now, you might not see because it's so small right here, but there is a dent right here. This small point right here is formed by a red candle in this area. So that brings me to the end of my video. Take from that what you will. I will see you on the next video. Till then, trade well and trade profitably. Cheers.